The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.
Hello and welcome to Your Money Yield Call. I'm Julia Lee from Bell Direct, and joining me in the studio tonight we've got Stephen Hogan from Nervous Capital and also Nick Radge from the Chartist. Welcome to the program, Nick. I mean, you have a lot in terms of a following for a technical analysis and a Chartist view on the market. When you look at the market now, are you nervous about the pullback that we're seeing, or do you see it as something temporary?
I think we're at a very important crossroads in the market at the moment. I think last week we had significant technical damage, and I think we really have to hold it about here. If the market drops below 4,800, I would be pretty concerned, and I would almost go out on a limb and say if we break through 4,800 and do it quickly, then I think we've got a significant high point in place, and I think we've got to be a little bit beware. So right here, right now, crossroads, certainly very important level. Don't want to see any more weakness. If we can hold here and start to push up, yeah, I'll stick with my longer term targets, which is 5,600, 5,700, but right here, right now, they're looking a little bit thin.
Looks like, Nick, that Australian investors are taking advantage of the currency movements that we've seen, because of course as an Australian investor you want to see the Aussie dollar falling to make money from the currency. Yep. I noticed today ETFs, exchange traded products on the Aussie market, such as the ones that track the Russell 2000, S&P 500 over in the US, the mid-cap index in the US, all hitting highs. So is that a strategy that you like at the moment, investing in the US with Australian dollars?
Yeah, look, we run some US portfolios, and we've certainly seen an increase in people using those portfolios, mainly as well, you know, the strength in the US dollar is one factor, but also the strength in the US stock market being another. So there has been that shift across there, but there's certainly a lot of bearish views out there. I think the other thing to be concerned about at the moment as well is Japanese bonds, what's going on there. US bonds yields have risen a little bit over recent times, and Japanese bonds are starting to rise, and that's starting to be a little bit of a concern, I think.
CSL, yeah, I've had it for a while, and it's been going really quite well, and with the dollar changing and everything, just wondered what you guys thought of it.
How do you play a company like this? How do you trade something like this when it's risen so much, it's reaching all-time record highs, there's no previous support resistance no previous resistance levels
Sure.
At these sort of lofty levels that we're seeing? Yeah. How do you read it?
Well, the first thing is we're already in it. I know that's a difficult thing to conceptualise if you want to go right here, but I think you made a very good point. We're in blue sky territory, there's no resistance above it, and therefore there's nothing actually stopping it moving higher. It's a natural thing for people to think, oh gosh, I better take profit, but there's actually nothing stopping it going higher. We're long from $33, but let me say right now at the start of the show, we are now in defensive mode with our trend following strategies, because we believe the trends of the broader markets have now turned down. So we're moving our trailing stops up. Our trailing stop for CSL is up around that $55, $56 level now, and we'll be exiting those positions if prices fall down through that. But at the moment, if we can get some consolidation above 56 and then break out again, I think that's the time to get in. But a little bit of consolidation would be healthy.
Okay, so some really tight stop losses. I mean, the other question was about Fleetwood. And looking at a sharp fall like this, is it a buying opportunity, Nick?
Well, you know what they say, those who pick bottoms get dirty fingers, so no.
That would be a no.
It's a substantial downtrend. The interesting thing is we've got a lot of capitulation now, and that's the first step of a turnaround. So big gap down, big move down, massive volume, wide-ranging bars. People are panicking, and this is where we want to see the buyers step up to the plate. So when the ranges of the bars start to contract and the volume stays high, that means the buyers have stepped up, they're accumulating the stock, and that's the time you start looking at. At the moment, it's too early for that. We can still go lower. So what we want to see is that momentum to the downside cease, volumes continue to be high, and some sideways range.
It's time to start the stock watch. So, Nick, what are you watching? Your time starts now.
Well, Limbocare is a stock that I've actually held in my super fund for quite a number of years. I continue to hold it. It's just had a bit of a stiff sell-off in the last couple of weeks or so, or the last week or two, simply because it's been a high-yielding stock, high-growth stock. And let's face it, at the end of the day, death and taxes, that's the only thing that's going to, that's the only certainty around, and of course InvoCare deals in those. So trend is still up. We're in a defensive mode at the moment, so we're taking a little bit of profit up here, but I think if it can break out, you've got to go with it again.
Terry, welcome. What's your question tonight?
CSR, actually. Could I get the panel's view on the technical analysis on that, please? I've been watching it for a while.
Sure. So having a look at CSR, and I guess the two things that have been impacting on this particular stock is the relatively high Aussie dollar throughout the last couple of years and the very difficult construction market. The Aussie dollar pressures have eased now, and hopefully that's a positive for CSR, and I'm just wondering if that's going to help it in terms of the share price, Nick.
Well, you'd have to think that the Aussie dollar's continuing, got to push it a little bit lower, so that will benefit the share price. It's not exactly being shown there that it's doing that at the moment. It's stuck in a range. We did have a little bit of a nibble at, but the trend didn't really follow through. It's going sideways, has been for about 6 or 7 months, so we probably need to see upside through 225, 230 to get some momentum going there again before I'd be happy jumping back into that one. I'd be concerned if it dropped back down below $1.80, so we're stuck in that 180, 225 range. Buy the breakout. Make sure you're not involved if we break to the downside. In 2012, we actually went below the 2009 lows, and we've come back up to those 2009 lows now, which is a significant line of resistance. So that might be why it's just stalling here at the moment.
Okay, so technically we're up for a pretty big test. CSR, though, should benefit from that lower Australian dollar that we are seeing, and it is a highly leveraged play on the construction space, the glass business, looking at a turnaround there, but that's probably a 2-year story for CSR. Let's go to our next call. We've got Warren on the line from Melbourne. Warren, welcome. What's your question tonight?
The question's just to the panel about Wesfarmers. Just wanted the valuation and technical.
Okay, and Nick, looking at it from a technical viewpoint, what do you think of Wesfarmers?
It's been a nice trend, absolutely. I think the good news here is the sell-off we had last week has been on pretty low volume, so nothing serious with that low volume, which suggests to me we're probably going through a consolidation rather than a distribution, and that's a positive. If it broke through $40 on any stiff volume, I would be concerned. We've been riding this stock for a while now. Obviously, we'll be getting out around that 38.20 kind of area if we break down through there. So I think $40 is the line in the sand. Low volume sell-off, that's healthy.
Okay, so Nick, is that usually a general rule of thumb that you ride the whole wave out up and then you get out once you start to see a reversal?
That's right. So we do not attempt to pick the bottom or the top. We do not attempt to predict where the stock will go. So what happens is we wait for the stock to make a low and start moving up, and we jump on board, catch the momentum, wait for it to peak and start turning down, and we hop off. So we're looking to catch the meat of the move rather than pick the low or the top.
And I guess if people want to find out more about your momentum strategy, you actually have a book out there as well.
Yeah, Unholy Grails, and you know, that's how I manage my super fund. 95% of my super fund is using the exact same philosophies in that book, and look, it goes okay. You know, the last 4 or 5 years we've outperformed the market by about a factor of 7. You know, takes 10 minutes a day. You don't have to read the balance sheets. You just got to follow the price. The price will lead you up and the price will lead you down, and you just hop off the bandwagon.
I've got Mark from Hunter Valley on the line. Mark, welcome to the program.
So I'm looking to sell Woolworths, and I rang the show about a month ago when the general comments were back then was to hold, when that was when it was in the $36 region. It's dropped to the 32, 33 mark, and I'm in a position where I need to sell in the next month or two.
Okay.
So I'm just wondering if they've got a short-term view. Is it a typical sell-off in May, or can they see a rebound, quickly in this stock, or should I just, since I have to sell this stock, should I just sell at this stage?
Sure. So 1 to 2 month time frame. It sounds like a question. For the technical analyst, let's go to you first, Nick.
Well, yeah, Mark, it's exactly the same call as Wesfarmers, exactly the same patterns, everything, same trend. Do you have to sell? Well, in the short term, price action tends to be quite random. So, look, there might be a little bit of bounce after what we've seen over the last week or so, but if the US can't hold it together after what's happened in Japan over the last week, well, potentially that Woolworths will go lower. So this is what we do. We modulate, out of positions when this trend is turned. As far as Woolworths is concerned, 32.50 is the line in the sand. If it goes through there, we're out. You know, we're not predicting, we're just saying the trend is now down, we don't want to hold it anymore.
Okay, so very clear line in the sand there from Nick. Glenn, welcome. What's your question for our panel tonight?
Julie, you just frightened the living daylights out of me with
really?
the Fleetwood shares. I have AGO and have been buying them on the way down, and I too loved Fleetwood around the $8 mark. But ultimately, with that crash, is that the donkey, what's the word, the jockey leading the horse, or the horse leading the donkey, or the dog and the tail story? Or, you know, have we got further to go with Atlas? I've been buying it on the way down, but ultimately that graph scared me. If we got any chance, JBH as well. Thank you.
Sure. So, look, I think the question was about Fleetwood and JB Hi-Fi.
No, AGO.
Oh, AGO. We've got Atlas Iron. We've got the stock up there. And actually, that stock price chart is scaring me now. It looks like we're below $1 at the moment. And Atlas Iron, I guess, having a look at just the seasonal flows, and the reason why that chart scares me is usually with iron ore prices, we reach a low sort of in the third quarter of the year because we tend to get seasonal weakness coming through from China. So we probably are going to see a bit more weakness. Iron ore prices, of course, are now in a bear market. So we've seen a drop of more than 20% from the peak that we saw in February. So down from 160, and I think we're about the 123, 124
last night,
US a ton levels. Nick, looking at this chart though, any hope for those people that love iron ore and love Atlas?
You can love it, but
it's not going to love you back.
It's not going to help your tax return, you know. It's interesting that it's been unfairly sold down. It doesn't matter if it's been unfairly sold down or fairly sold down. The bottom line is it's come from $4, we're at 75 cents or 77 cents. Everyone's losing money because this is the lowest we've been since early mid-2009. Trend's down, you know, that's got to change before it's going to start moving up again. So wait for it to change, wait for it to turn, then jump on board, but not now.
Wise words. Buy it when it starts going up rather than continuing to go down. Let's go to our first email of the night. This one comes from Tom. Tom asks, do you think telcos, IINet and TPG Telecom are worth buying now after their recent falls? Thanks, Tom. I mean, these are two stocks that have been reaching all-time record highs, fantastic performances over the last year. In fact, if you think, you know, Telstra's been doing well with a 30-40% return, these stocks have been returning more than double that. So Nick, looking at IINet and TPG, what do you think?
I've held both of them for well over 12 months. I exited IINet a couple of days ago. The fall, yeah, that was quite surprising. That was a stiff sell-off right there. TPG, we're holding on by the skin of our teeth, but again, that's been a good stock for us over the last year or two. And as I just said, our trailing stop levels are very, very close on that. So another couple of down days and we'll be out of that. But, you know, we use computer models. It's now telling us the trend is down, take defensive action. That's what we've got to do. If they turn around and start going back up, hey, we'll jump back on board.
Nick, you're cautious on IINet TPG. Is that the whole sector, or is the...
No, we're still running Telstra. We've been in Telstra from about 310, 315. I think Stephen makes a very, very good point with regard to yield. With a yield like that, it's going to be gobbled up by the institutions and any weakness, so you'd have to think it's going to be supported. You know, it's probably for a discretionary type position by the dip. Dare I ever say that? But yeah, look, we're riding that. Our trailing stops are back at around the 450 mark, so we've got a bit of room to move there. Obviously, INET, TPM, a little bit more volatile. We've got tagged out of INET, still holding on with TPG.
Okay, so a lot of the telcos there, IINet, TPG, as well as Telstra. Next caller is Jeff from Melbourne. Jeff, welcome. What's your question tonight for our panel?
Just on NAB, I bought some NAB shares a couple of weeks ago, mainly to grab the dividend, and which comes out, I think on Thursday, becomes ex-dividend. I'm just wondering, I don't know, I'm just wondering whether I should be selling it maybe tomorrow or hold out for the dividend, because I know, you know, once you get the dividend, it'll drop by that dividend amount, which is what, about 90 cents. And then, I don't know, I'm just a bit nervous that it'll start trending, you know, down, and it'll take a while for it to sort of go back up again.
What's your thoughts, Nick, on National Australia Bank?
I've got two things to say on National Australia Bank. Again, I stress the yield play, I think, is not going to go away anytime soon, and any weakness is going to be sought by the institutions, exactly what Stephen said. Jeff, just on buying into the dividend, funny you should bring this up. Back in 2005, long story short, I did a lot of research on price action in and around dividends. And just recently I've revisited that research using the exact same strategy and about to release an ebook on a specific strategy to profit from the become dividend time. And it's very, very effective and very useful. Unfortunately, NAB we wouldn't be going there, but it gives you a good idea on how to trade in and around the dividends, and it's a good strategy, very, very good strategy. But to answer your question, I think weakness is just going to be bought in the NAB for the long term. Instos are going to take up this yield.
So looking at Santos, and I guess oil prices have been quite volatile. I mean, Nick, looking at STO, what's your view on Santos?
Yeah, you know, I was pretty keen on it. It was just struggling to move on from it at the moment. It's chopping backwards and forwards. Probably needs a little bit more upside momentum for me to get comfortable with it again. I certainly did like it about 3 months ago, but it just faded. So up through 13.75 would give me a lot more confidence that it'll keep moving higher. And I certainly wouldn't want to see it back through $11.50, $12. So stuck in a bit of a range, but choppy price action doesn't really do it for me at the moment.
We have Warwick on the line from New South Wales. Warwick, welcome. What's your question tonight, bro?
Yes, I'd just like to ask a question about DYESOL.
Sure.
What is short-term prospects?
Okay, the DYESOL, DYE is the stock code. This is actually one I was talking to a few people at lunch the other day. Interesting technology, solar cells that we're looking at. And usually when you think of solar technology, you think of the big, chunky sort of solar cells that go on roofs. This one's a little bit different. It's almost just like a dye. It's almost like a film that goes onto surfaces. And it looks like, in terms of technology, it's been making leaps and bounds. So interesting technology. Looking at a stock price chart like that, though, Nick, I mean, how do you manage something like that? Obviously, people buying into a stock like this usually do it because, you know, they believe in the story. Is this one that traders would get into at all?
Well, certainly one traders would get into and be very quick to get out of as well. Volume plays a very important part in this kind of a stock when it's doing this, and really, Warwick, the very important thing to look at here, it happened today. It started back on the 14th of May, and you saw it again on the 20th of May. You saw big pushes to the upside, and the price closed very, very weak on the day on a very high volume. And there's only one way that can happen, and that's from selling. So there is a lot of people taking their profits up here. It's come a long way. I've said it before, people can't help but take profits, but they leave a footprint in the share price. That is a low close on high volume means sellers. We saw it today. It doesn't mean it's going to plunge. What it's saying is there's a lot of supply in the market. It's probably going to find it incredibly difficult to go higher. So expect, at the best case, some more sideways price action. Worst case, buyers dry up. Sellers are going to have to sell lower. So I can't see it going any higher at the moment in the short term. If it consolidates for a period of time, by all means, but at the moment, no.
Let's go to our next caller, John on the line from Melbourne. John, welcome. What's your question tonight?
My question is about Cenex Energy, SXY. Bought it about 6 weeks ago. Looked like it was going to break out of the range on some good news. Ever since then, it's just gone back to the bottom of the range. You think it's time to double up?
Double up.
Good question. I mean, you know, trading a range, Nick, is, you know, you want to buy at the bottom of the range.
Sure. If you're a range trader, absolutely. This is where you want to pick it up right here, John. Just lean against the support, if you like, which is sitting here at 60 cents. In terms of doubling up, well, it's not something I would do, but you've obviously already got your breakout trade in place. That's one type of trade. This is a different type of trade. But what you've got to be, what's got to be noted now is if it breaks through the lower end of the range, then that's a pretty sick kind of sign. It suggests prices will fall back to 40 cents if that happens. But look, it's held here, what, 1, 2, 3, 4 or 5 times at this level. I'm not going to say it's going to hold again, but certainly if you want a low risk entry, this is the time to do it right now, and just place a stop a little bit below that line of support at 60 cents.
So let's take the next email. We've got one here from Les, and Les asks, Crown has broken the uptrend after selling its 10% stake in Echo last week. Is it a positive, negative for the business? Is it time to exit the stock?
I think the important thing here is the call has suggested that it's broken the uptrend. That's the first thing, and the second thing is the broader market, from the way we measure it, has also broken an uptrend, and that's two signs to me that you've got to be a little bit careful perhaps. We still hold it. Our trailing stop here is down at $12, so we give it a little bit more room to move, but we are in defensive mode, so if prices do fall back, we'll get out of that. But as far as we're concerned, the trend on that stock is still up.
Okay, so still an uptrend, so a hold, happy to hold on Crown. CWN's the stock code there. Our next call is Peter from the Gold Coast. Peter, welcome. What's your question tonight?
NRW Holdings. I know everyone's having a mass exodus on anything to do with mining services, but quite a tidy company. They've had a bit of a bust. What's the panel sort of think about them?
Nick, we'll go to a technical view first on NRW.
Yeah, well, it's fallen a long way. We did see, Peter, back in late 2012, a bit of capitulation, some good volume come into that. That was a good sign. Still a little bit of volume around, which suggests to me that there's some supply still to be let out. And until that's out of the way, I don't think the stock's going to turn around. But I think we're in the bottom end of that turnaround phase. And you've probably got a low risk buying opportunity down here around this $1 level if you wanted to push back in. I would be concerned if we broke through $1 on very high volume again. Low volume here is great. That's what we want to see. That means all the sellers are done. And once the sellers are done, there's no supply. The stock should be ready to rise under the right conditions. So just keep an eye on that volume.
Okay, so watch the volume. Low volume is a good sign for NRW at the moment. Until next week, I'm Julia Lee from Bell Direct. Have a great night.